Yo, what's up? Yeah,
Is this like still recording?
I think so. Do you want to stop the recording or something?
I can't. I don't think I can.
I think we can.
Can?
Yeah. I'll just click stop recording.
I'm
Do
not
you want to
sure.
stop? Yeah, I can do it though.
No, I mean there's like nothing be like off the record, but I mean
Yeah.
without everyone here,
It's a little bit weird, I know.
I mean it's not weird. Yeah,
I mean, you got the first blow in the morning, right, with the NFP.
yeah, but I was like kind of like late. I mean, I woke up it's like 7 already. It's like I mean there's like that Apple trade I've like
Yeah.
recommended. It's like I have to like see where it's trading.
Mm-hmm.
So kind of like yeah, I mean that trade went insane. I mean at close it's like 6x. I mean it's interesting, but
Not bad.
yeah, I mean it's just that's kind of like key. I mean the major news is like the weakening labor market.
Yeah. Let's run through the NFP first, right?
NFP. Yeah, I mean
Yeah.
what's your
Let
take?
me
I think you're more focused on the motor vehicle side.
yeah, I focus on more on the motor vehicle. Let me share my screen. Um, so this is what I look at. I'm sure you look at more stuff on a higher level, but I'm just I just this is the Bloomberg function. I don't know if
Ah,
Icon has something similar. So I jump in and I look at this. So what caught my eye first of all, you got this -20 in the information, from +10 to down 4 in the financial activities. And then you have this government tailwind is gone. So you can see actually, I've been saying this for a long time that NFP is being held up a lot by the education and health services and the government sector. So now that tailwind is gone, and then healthcare is like giving back some gains as well. So you can see how these sectors are coming lower. Right, so the other ones like mining, the same construction, a little bit better, manufacturing actually improved. Trade, these are roughly the same. Financial activities, obviously, have some layoffs. So yeah, so it's like I think the biggest moves is in these buckets that I was talking about. So
I think the information infotech, the tech layoff is, I think it's kind of like telegraphed
yeah,
quite
so
a
tele,
while. I mean, it's like
yeah,
the ADP numbers have, like the information sector is just like been
yeah,
for like
like
3 or 4 months, but I think it's like today is finally
it,
showed up in the NFP number.
yeah, if we go further into it, I think, in the information, this is what we see. So let me make this a little bit wider so we can see more dates. Yeah, so it's a pretty significant drop on all of the sectors, right? Obviously, motion picture last year we had the strikes.
Ah,
Um,
yes.
yeah, so that's you know uh, like a one-time event. And let's see what's giving on. Okay, motion picture. That's one. That's down. Yeah, telecommunication, computing infrastructures. Okay, so there's no more detail here. No more. Okay, so from what I see here, it is um it is like a slowdown in these segments that were pretty strong before, like the education, government. Um, actually, do we have the seasonal? Well, that might be later. I was thinking the education seasonality.
Is there actually?
I think so. It's like when schools are off or something. May, May. Uh, yeah. But anyway, I'm not like
Anyway, I think like healthcare, like this is like a consistent, like ongoing demand. I mean,
yeah,
most
healthcare is always ongoing. Like if you look at the job openings, always ongoing. Like we need more nurses, we need more doctors. I've friends who works in the Stanford hospital. They say like this has been going on for years. It's like no surprise to anyone. So yeah, like healthcare, social system, private education. Yeah. So this is like ongoing forever. And the drop actually isn't that significant on the healthcares. It was like the education side dropped off more. Um, that's like a government, yeah, dropped off at all levels. So, I mean, yeah, I mean, the ground is shifting. And while we have these lower numbers, it kind of brings us back onto that birth death model. Like with this number, we'll be looking at negatives, um, you know, post adjustment. This is more like a negative, almost a negative NFP print. So
well,
yeah,
right. I mean, this not sure like if it's like really like negative. Um,
I'll say if you
maybe like
minus
it's
like 100K from,
being like the I think the actually like really spook the market is like the spike. I mean, even like if like 0.1% of increase in unemployment rate, I mean that's still significant. But today we have like a 0.2% increase.
Mhm.
The unemployment rate just like suddenly started spiking.
Yeah,
Well, I mean,
and the
yeah,
labor force participation rate only increased by 0.1%, so that doesn't really explain the rising unemployment rate, right?
uh, it's like the process. Let's see. Yeah, I think like several things is like one thing is the I think earlier in the year is more about like immigration.
Uh-huh.
I don't think right now that is more of like a yeah, like the crossing data is increasing.
I mean, it's
I
kind of hit
mean,
it hit our case, right? It certainly hit our case. Our case is that the economy is not that strong. It will have
yeah, I mean,
it will have a contraction rather than a crisis or recession. And there's
it's
no
just like 1 month. I would just like probably like see like next. I mean, like I mean, this month we also have like the quarterly census,
I mean
employment and wage.
look at work. Like this is crazy.
Yeah,
Now we're pricing 4.6 cuts by
yeah.
end
I
of the
mean,
year.
this might be like a overshoot. So I would just say like today is kind of like it's. I mean, of course, like rate is kind of like going crazy.
Right, yeah. So two
Uh,
year
in the bull
2 year
today
at
is
338, right? 10 year
yeah,
almost
we
like
had like a I think 210 is almost close to
close to parity, I would say.
invert, you know, like right now it's like
Oh,
negative.
388. Three,
Like
yeah, uninvert.
210 is like minus 8 bips earlier. I mean, it closes at like -10, but the uninversion of like the 210 is kind of like it's been going on for like a month or so. Like I think the
Yeah,
yeah.
right. So we got this. If we look
See,
at
like starting from June, like the yield
yeah,
curve just started like uninverting.
mm-hmm.
Yeah, it's like the bull steepening. I think Mo has already mentioned like this is gonna be like a. I mean, like people are positioning themselves for like a recession, but whether there will be like a recession or not, I mean, ain't to be seen.
Yeah,
I frankly just want to see like more data. Like we have like more data coming from like during the middle of the month, whereas like the quarterly QCEW was like the full name there. Let me see. Yeah, the quarterly census of employment and wages, which let me see. Let me see. Um, yeah, but I think that's kind of like uh calibration. Like you use the QCEW to calibrate whatever distortion in the labor data you have. And I think that will give like a better picture if we think the current NFP figure is kind of like a little bit bloated. We'll be able to see like the adjustments during the QCEW. That's coming like during the middle of the month. Um, what else? Thursday. Yeah, I think today is just like the NFP.
yeah. Today just and I mean we got the durable orders still
Durable
down, right?
orders.
So here's the situation, right? This is what I feel. If like let's go back to the U.S. CPI. Goods has been down, right? So that's a pretty good tailwind. And then if we look into the goods, then like wait, month over month, year over year, year over year. Um, goods have been down substantially. Household, like these big ticket items has been down. Um, so and then if you look at the services, the shelter is cooling off slowly, but the trend is still there. And what I think happens is uh, the we shouldn't be trading a recession. I think what we should be trading is a early cycle. Um, the reason why is we haven't reached early cycle yet, but I think we need to position for the early cycle.
Okay.
The reason why is like you look at the economy, right? I don't like yesterday's call. I don't see a risk of a huge crisis, so we can cross that out. And then we won't have like Fed emergency cut like 50, 100 bips. Like that's I think off the table. And why I think like if you just look at the new orders, you look at these numbers, you look at ISM, the problem is really uh, there's no demand for goods. And a reason why there's no demand for goods, in my view, is one, interest rates too high. Second, everyone already bought quite a lot of things during the pandemic using the helicopter money. So um, I like most like Apple argument is because now we're coming out of this cycle. A lot of things is due for replacement. You have this AI tailwind. You have this iPhone replacement cycle, also like AI related. And then people who bought tons of stuff, like big items like cars, they have been running for like almost 3 to 4 years. And then coming up in 2025, a lot of the leases will be due, right? If you take a 36 or 48 month. So in my view, with a cutting cycle, and these replacement cycle also coming up, there will be a demand out there, but it won't kick off this crazy inflation we saw. It's because everyone had so many cash, they just buy things and then like bid up the prices. Like you can see in the watch market, like the luxury good market, like everyone's bidding these things higher and higher. I don't think we'll see anything like that. What we'll see is a gradual replacement cycle of the stuff that people bought, and we won't see any of the crazy uh you know bidding war in the goods market. So I think that's actually why I think it's going to be an early cycle rather than a late cycle recession. I know the rate market trades like there's a recession coming. um I personally don't think so, because when the orders are back, you'll have PMI back. It's like a ripple effect when people like start to clear out the inventory. Um, I remember we talked about this. What's the inventory? Uh, yeah, what was the inventory number? I remember we looked at a couple days before. Everything. It's not any of these. I need to look at the absolute level rather than the change. Like, this is what we were talking about. Actually, let's do a 5 year. It's easier, right? So you have this huge ramp up of like inventory, and then just stuck here because people already got what they want. Your hiking rates, and then this is not dying off. We need to see this dying off, and then digest these orders, and then bring us back to this historical trajectory, and then we're good to go. Manufacture more products and so on. So this is how I think about it. Um, yeah. What's your thought? Like after today's number?
Well, I mean, I don't really have a view yet. I mean, it's just one number, right? Uh, we'll probably need to like see one or two more numbers to like, because I don't think like inflation is actually like the problem right now. I
It's
mean,
yeah. Here's my right. That's my argument as well, right? So like you can lower the rate and people will buy more stuff, but it's not going to be a bidding war, so you won't see inflation coming up like crazy. That's my view, and I think it's
I think the thing is like, um, so I mean, right now I think probably like what makes like the market is like also like jittering is like, really I think it's more about like whether like this sustained like high rate is starting to impact growth, right? It means like right now like inflation is no longer like the concern. I mean, but like just like to talk about like the growth perspective, like if you don't have like enough growth, I mean, there won't be like unless there's like a supply side issue. I mean, for example, like Iran just like or like whatever like happened in Middle East, like the oil cannot like get out from the Gulfs. Like like this happened like I think in like the 20th century, like 70s. I mean, like where there's like an oil embargo, like the supply side issue
Hmm.
induced inflation, but if nothing like supply side constraint, I mean, if you don't have like enough growth, I don't think you will have like you don't really have like inflation problem. I think right now like
Exactly.
what makes people are like concerned is like whether there's like a growth issue, and I think we need like more data to see that. So I mean, like right now, I'm just thinking like
But
growth, we probably like need more data to confirm that.
wait,
And
I,
then there's like the fiscal part of things where like the
mhm.
debt
I
landscape. I mean,
I
that's
do have a
not,
question though about like the growth.
yeah.
Why like in this view, what are people saying that like what is the reason why people think there will be a growth issue?
I'm just kind of like trying to think about like reasons like why we kind of like why the market is trading like this today. I mean, obviously, like inflation is not the issue, then like it's like labor market weakening. I mean, if you don't really have like enough like in employment, like everyone is kind of losing their jobs. So like in the end, you will like affect growth, right? It's like no one's producing things.
Oh, yeah, right. I think that's my argument here. Where was the chart? Yeah, that's the GDP, right? We need to get like the consumption up. I think you need to get interest rate down. Just like, okay, we are going into this period when we are having low productivity. Oh, sorry, not like low productivity, but low production level. Um, as ISM has been telling us forever, right? So if you do nothing on the rate side, then it's gonna keep choking the economy. Um, Therefore, you won't kickstart the next cycle where people are ordering more goods. And first of all, you gotta clear away the inventory first, otherwise you won't have the extra growth, right? So you want to see inventory moving in the right direction, and then people demanding more goods, better goods, like new technology coming up. Then you'll have more orders. Then you have more employment. This is how I think, like how we break the cycle. Otherwise, you'll be in this there like you'll be in this like vicious cycle forever. It's like, oh, no more demand. Okay, we're gonna cut back on employees, and employees they don't spend anymore because they're unemployed. Um, and you have less orders. You just keep on going forever.
Yeah, I mean, so like from the technology side right now, like everything is kind of like relying on this like AI thing to come
Yeah,
into
I
like real life. I mean, it's just like whether it can kind of like live up to its kind of like promising, like just like live up to its promises, like we're now thinking like AI can kind of like do a lot of great things, but I don't think it's at that phase yet, like right now it's more like a PowerPoint phase, like you're like
right.
uh envisioning like great things the AI can do, but actually it's not at that phase yet. So yeah, I'm not sure. I mean, for me, like today's reaction might be like an overreaction, but I think we just need like more data to confirm if there's like it's just like a scare or like I mean it's just like whether it's like a growth scare or it's actually like something is broken and actually like starting to affect growth. I think I just need more data. I mean, yeah, I mean, just one data is not gonna like um, really like say anything.
Uh,
I think
uh,
the key is like the 4.3% unemployment like rate. I mean, this is kind of like matching what Powell was saying. Like we don't want to see like more like deterioration of labor market.
mhm.
I think he like the Fed speak like also mentioned like they want to see like the unemployment rate holding at the 4.1% level. But today just like
Right.
broke through the
I
level
w- which I think is
immediately.
which I think is a good thing.
Um,
I mean,
maybe.
I don't want to say it's a good thing in terms of like people will get like will lose their job and so on. That's not a good thing. But what is like a silver lining is the Fed will realize they are in a position to cut. They need to look at two mandates instead of one. Like this is like you have been waiting for this long, you have been patient all this time for exactly these moments. So like the FOMC meeting this week, like we had some commentary on it as well. Like what I said is like today is that day, right? It's when they say they're open to consider both mandates as equally important. And then we're not even switching to the other side if they think inflation's less important than the labor market. That in that case we'll be looking at like more cuts. Uh, but we haven't get that from FOMC meetings. We haven't get that from Powell. But I think the current stance is good. The data shows we're slowing. Then the Feds need to act on it, which will help the retail, especially on big ticket purchases, like houses or cars, or like I don't know, like large like tech stuff. I think people are using Klarna Afterpay a lot, on these bigger purchases. So,
Okay, I mean,
so
yeah,
I rather see this early than Sep.
then September, like,
Yeah, because like Powell has been given the green light by today's data to talk about his plan
you
in
mean
the
like the,
Jackson Hole,
okay,
right? He like the I think the worst situation that can happen is August still fine. We go through Jackson Hole like pretending everything's fine. And then we got the shock in September. I think that's the worst case because they won't have time to shift quick enough in their narrative, or like they need to have those time to prep for what's to come. I think it's actually good it happened in August because the
okay.
next number we know it's not gonna look pretty in September. That's I think
But
from
I
our
mean, like
analysis.
he won't cut at Jackson Hole, right? I mean,
No,
he can jawbone as much as he want, but he won't cut rates. I mean,
oh,
uh,
yeah, but everyone knows that. Everyone knows he won't. He cannot cut at Jackson Hole, but he can start pivoting even more at Jackson Hole. It's like he doesn't need to come out and say, "Oh, we gotta wait for more data."
I mean,
Like
like how
to
much
cannot.
can he
Yeah.
pivot actually? Like he was already talking about like a three-cut regime as like things like that. Like how much can he pivot? Like he now needs to deliver. Like there's
No,
no more pivoting. Like
I think the further pivot is when he look at the two mandates and say they are not equally important. The labor market is more important than inflation now. That's the pivot.
okay, I mean,
So that warrants even more action, right? The data the Fed should be tracking is toward away from inflation and to the labor market. I think that's the pivot I'm looking for.
okay. I mean, in my opinion, like they're just late. So yeah,
Right. I mean, they're behind.
probably.
They
I
messed
mean,
up in June, right?
uh, so yeah, I mean, let's
But
see
here,
like what more data brings us. I mean, it's just like
right.
I'm.
So here's the thing,
I
right?
mean, it's just like you have to like act when there's nothing happening.
Wait.
Like
So here,
the world is kind of like out of control right now.
but
So I
I
mean, there's like many like different shocks. That's when like things goes worse, like you don't really have like time to react. So I mean, yeah, maybe like you're right, like we're in the like early cycle, but I mean,
no, we haven't started the early cycle yet. Like we need to
okay.
get through this trough, but it like the
So how long would you think like this trough will last though?
definitely till end of the year.
Okay.
And then 2025 is where I think the demand will. It also depends on other things like the holiday season plus, the holiday season is a really good time to clear out the inventory, right? And how far we can clear out the inventory and the reset expectation, and then start reordering, into the new year. I think that's the timing where I'm looking. But if we had like still good data, but ISM keep dropping, we are less demand, less demand, less demand, then it will spill over to next year, into a new ordering cycle. So that's why I think it better happen sooner than later. But I was gonna ask you this question. If we got this set of data last Friday, do you think Powell will cut in July?
Well, maybe he will. I mean, yeah, maybe.
Right. So that's
I'm
that's what
not
I'm
I'm not
thinking.
sure like if his like decision is well, I mean, this is like going into like drunk uncle like talking over the table
Right. I mean,
realm, but I'm not gonna talk about that. But if he's just like gonna like be data dependent, then he'll probably cut. I mean,
right. Okay. So if he decide to do a cut, then he's putting he's slowly like adjusting the balance and then incorporate more labor force market data. Right. So I think during the FOMC meeting, in the opening remarks, he actually said like the labor market's still strong. It's not like stellar, it's not like fantastic, but it's still strong. I think that's what he said. So if he's gotten the data, I don't think he'll say he'll put it that way. He'll admit there's like labor market is loosening more than expected, and it's just because of the timing. We have this labor data on a Friday, 2 days after FOMC, that he couldn't um, really foresee what's going on. Right? I don't think they'll do
mm,
precautionary cuts.
but I mean, even like during like the July, like the last month in FP data, like the previous months have been like revised down like for quite a bit. Like
Mhm.
I think that for May and June, like the final revision was like negative like 100K in
Mhm.
total. Yeah, I mean like oh, I mean he'll say like yeah, labor market's still strong, but I think just one more data, I think he will probably like realize things are probably like worsening like faster than he thought. I mean, yeah, I mean we'll just see. I mean like market currently like 4.6 cut by the
Uh,
end of this year. We'll see.
yeah, and also the other reason why I think it's still okay. I don't mean in an okay sense that we'll like continue the growth. Like we're in this contraction territory. But what I mean is, he in September will have the option, for the rest of the year, um, to adjust based on how the data goes. Like he has the option. you know,
Yeah, I mean, this just like the timing is gonna be tricky. Um,
yeah. So that's why the Jackson Hole becomes way more important. Yeah. So that's my view on the macro side. Um, yeah. So we'll see what happens next week. I mean, this week, let's switch to my coverage, EV side. Um,
yeah,
pretty, crazy move over the last 2 days. So we're almost down 10%. So I picked up some, Tesla shares. Like I'm on the minimum, long position on Tesla right now. I picked up around 20, what I did, 209. So it's I think we are like I'm willing to, take this, little sell off in the market to open a small position and then see if I need to add on, later. If we go further, I'm more than happy to add on more positions, as we, ramp up for the October events. Um, and the whole sector sold off, not only EV, legacy OEM sold off as well, um, and also the Chinese ADV. So everything's kind of risk off on my screen. Um, very few exceptions here. Let me see what's yeah, everything's down. Which, it's, apart from Ferrari, obviously they had a stellar quarter. Um, and that just makes me think, that again the relative play, is on, the arbitrate is on, in this environment. So, I finished the Tesla modeling yesterday. I balanced the balance sheet, which is awesome. And I've been building scenario analysis. I've been, going through the 10Ks, and build these scenarios. And what I realized is Tesla, they do need some other vehicles. Um, the current lineup is not going to do it for them, and, uh, so it becomes really really crucial that this robo taxi, be, a tailwind to the business, because from what I can see, on Tesla, is like I'm not just looking at it from a EV company. I'm comparing it historically to how many, cars that manufacturers make, or like how many models can a manufacturer sell, in a year. And, the biggest record is 2 million cars by Ford Model T. So they got like 60% of the global market. And, Tesla right now, the Model Y are the very few cars, I think one of 5 or 6 cars in the history of humankind that sold over 1 million units per year. And combine that with the Model 3 with the current pricing, I think 2 million is the number they should go. Like that is a saturation. You won't be able to sell anymore. We see the cannibalization of Tesla shares in other markets by BYD and others. I think it's very fair because they're only supplying these two vehicles. I think they reached their peak. Now, if you look at Toyota, like on their like Corollas and like Camry, like normally they will hit this rate where you saturated the entire market. I think Rivian's CEO said the same thing about it. Like, we need more choice at a $50,000 car, and that's gonna fill the EV growth, for the foreseeable future. Um, but, on the Cybertruck side, I do believe there's an upside to this. Just from the people buying, and also from the research I'm doing, I think they could sell a little bit more than 250,000 cars. I think they can sell like 400,000 cars. Um, of Cybertrucks. And that's because I'm positioning it in between Elon Musk's own projection of 250,000 per year versus Ford having 750,000 per year on the F-150. And I think truck, because it's such a big business, and also Cybertruck is still expensive. People still are like waiting to get on it, and it's going to have a greater market share than the market is predicting. So that's my view on it. And but combining that, you'll be looking at around like 2 million and 2.5 million vehicles saturation at the current level. So that's nowhere like if you want to expand to 10 million cars by 2030, that you are like 7.5 million cars short. So what they need to do, one, obviously the robotaxi, but let's put it on the side. The second, they need the Tesla semi and Roadster. Those two will add another like I would say 250 at maximum. So that brings us up to 2.75 million. We're still 7 million 25 250,000 short. And that's why I realized what all these sell side analysts who are giving a 100 to like $120 ratings are talking about. I realized what they are talking about. They're talking about this. You're having a flatline growth in the auto business. I can see it. I did my own calculation. It makes sense. And even though we have a huge upside with the current um, lineup, we're only like the maximum I can give it is like 1 million more cars with this current lineup. I don't think Tesla can sell anymore. So that brings us on to the question like if the next gen vehicle will sell alongside the robotaxi, I think it's still a very big chance they need to, give that out if they are hitting regulatory issues on the other hand. Like, I mean, they really need to do this in these two scenarios where one, obviously you're looking at the regulatory environment and you'll be saying, okay, so for this robotaxi to work, I need so many things that need to be done for it to put into service. But on the other hand, if I can sell this larger volume car, then I'll sweep anything under $30,000. Ex China, ex BYD, like all of that. I'll sweep market because it's just cheaper to run. You have like autopilot, right? And then the charging infrastructure is improving. So I think there, and also not mentioning like exploring to South American market and other market where like people actually buy 20 people can only afford 20 to $30,000 car. I think there's a huge market down there, um, and they should go down that route. If not, what they can do is the Model 3 and Model Y that make it cheaper and make it $250,000. I think that's the next leg of growth. I think Elon knows it, or the management knows it. This is why the auto business is flatlining, and that's why auto business flatline is my base case. So moving on to energy, I think energy will see more upside. I like in my model, I'm giving it like the full beans, and the numbers are pretty crazy by the end of 2030 because I'm incorporating what Elon Musk is saying as like a very ambitious um, goal of 1 tera. How do you call it? Like terawatt? So it's like a million megawatts and 1,000 gigawatts. And if they deploy all of that, then you'll see the energy storage business, with my calculation, overtake the car business in 2027. So that is another higher margin and really strong revenue driver. And I'm looking at their expansion plan. They are opening up another 80, almost like I would call like 80,000 megawatts capacity in Shanghai. So combine that, you'll have 120. So they actually said in management meeting, they forecast the revenue, the annual, demand for the energy storage going to be around the 100,000 capacity, 100,000 megawatts per hour for the next couple of years. And if they include the Shanghai factory without, increasing capacity at Lathrop, they can actually reach that number. So if they can reach that number and deploy all of these, we'll be seeing a almost 200% increase from 2024 to 2025 revenue. It just in the energy generation storage business. So I'm pretty excited about this. I think this is what people might be missing from the sell side, especially they talk about this is a really strong growth. I don't think they'll realize how strong this will be, uh, and it's going to be a significant market share, or like revenue mix versus the auto, because I don't think they can deploy, or like they can increase or like make new vehicles or like new models as fast as they can deploy these energy storage business. That's what I've been working on. I'm fine tuning my revenue model for my base case, and once I have that, then I do have like a base case for the revenue all the way till 2030, and then I'll see what's like the maximum expansion plan they can do. Like the Mexico factory obviously is for next gen, so I included almost like 2 million cars. I think that 1 million cars. I think that's reasonable, and robotaxi 1.5 million. That's also I think pretty reasonable. So, but the annual capacity of all of these will be um less, like a little bit more than half of what Elon Musk is projecting at the 2030. I I you know obviously he's really good at executing stuff, but I think this is a reasonable estimate, just based on the current market, and I've given it quite optimistic views on Cybertrucks and Semi and Roadster. And yeah, so looking at the revenue side, let me actually compare it to the MODL for Tesla. Oh, wait, hang on. Sorry, you couldn't see my Excel screen earlier. So I was talking to the blind. Yeah, so for 2024, I'm actually on a higher 105. Revenue is like 105, so consensus at 96. Consensus at 99. And for 2025, I have a 144, while the consensus 116. And the growth I had there mostly is gonna be from energy segment and how that's gonna scale up. On the auto side, I don't have that much. Like you look at the energy, like going back to energy, like energy um, estimate is 44, but for me, I'm almost at 96. So double that of the energy storage deployment they had there. I think this is way, way too low. Even with management guidance in 23. They were limited by Lathrop's expansion plan. So the ramp up is pretty slow. They're only going to ramp up by the end of this year. So let's see, the highest estimate is only 55. Um, which means they'll be running at only like 40%. They'll deploy only 40% of stuff they produce, which is too low. I think this do have a big chance of revise up. And yeah, so I'll be fine tuning the Robotaxi and Optimus, but Optimus not gonna come to 2026. So I do think 2025 is back in the scope. Not because of the Robotaxi, it's because the next gen. Um, and hopefully we'll see some result on the next gen product. I know everyone's focused on Robotaxi, but um, we have the Model Y refresh coming up. So yeah, that's the quick rundown. And next week we have Rivian and Lucid's report. I'm still working on the earning preview, so pretty optimistic about these companies. As a first scrub, sell side is warming up to my view, and we have this sell off that's nothing to do with idiosyncratics. So let's see what the earnings about, and I'm feeling pretty good about these two companies. Yep, and after that I'll be ramping up on coverages. So the coverages will, in my view, focusing more on the supply chain of EVs and the key players, key OEMs in the sector, plus the robotics side. So yeah, that's the update I have. Yeah, Fan, do you want to call it a day, or we're at the 1 hour mark?
Yeah, why not? I mean, it's Friday. Just take some
It's
rest.
Friday.
I'm just gonna. I mean, I've been just like paging the Refinitiv help desk, repetitively. Like, there's like so many things that
Yeah.
doesn't really make sense. I'm still like trying to. But yeah, I mean, just working out like the options analytics. I mean, obviously we can get the times and sales of like a specific options contract. So
Mm.
yeah, I mean,
Wait,
obviously this is
I
what?
do have this question for you though.
Yep.
For the Robotaxi event,
When is it?
let's October. Let's work on something like maybe another cost structure. Um, but also I'm willing to sell some. I'll run this by you later, but like probably selling some puts. Um,
Oh, yeah, I mean for like event related,
no,
I really, I
I
mean
mean
just like
I'm looking to long though, right?
yeah, I mean of course, but I mean just it really depends on like your time, like time horizon, like if you want to play like a if your play is more like a 60 days play, I mean,
Yeah, 60 day.
things like look different. I mean, but for the event, I think like usually you just want to like short wall with like a slight directional bias, like directional bias. I mean, that's probably like how you do it. So yeah, I mean, you can always build like your core position like whenever like opportunity arises, but
Mm-hmm.
if you want like something that kind of like I mean these kind of like tactical like whether it's like the Tesla earnings trade I've shared before or like today's like
Yeah.
Apple earnings trade. I mean it's kind of like just
Mm-hmm.
it's just like it's a Red Bull type of trade, like it's like an energy boost. I mean it's not like
Yeah.
your
It's not the
core
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 position.
position, but I mean when you structure those, I really just wait till like from like 1 week before the event. So I mean
Sure. Yeah. I'll
yeah.
keep an eye. Yeah.
Yeah, but I mean,
Okay.
like
Mm-hmm.
on the other way, I'm just like, yeah, I mean, like I'll probably just spend some time on like doing some like tech labs kind of
Mm-hmm.
work. Of course, like Mo's like asking me to build some like option analytics. I mean, I'm just still like trying to figure out, for example, like some data details on
Mm-hmm.
definitive. I mean, they do have like a extensive like a database where you can actually retrieve time and sales and also like historical option open interest and volume of like options. And yeah, I mean, a lot of like to work with. So it's gonna like take some time. I mean, next week is gonna be like relatively macro event quiet, so I'll just be like spending some more time doing some like tech work, and hopefully like the Refinitiv help desk can help me clarify
Mm.
some of the
Yeah.
stuff. I mean, it's like the data or like the information are like kind of like scattered all around. I mean, but like there's no a structured way to like check for documentations and stuff. So yeah, I mean, hopefully we can have like some like open interest or like some big trade tagging thing going on.
Mm-hmm.
But I mean, it will take a while. It's not too difficult, but it's like not too easy either. So it definitely will take some time to like get everything sorted out. Because like the whatever metadata the Refinitiv is using is kind of like opaque, unclear, and you always have to like ask for clarifications. I mean, that's kind of like rough. But yeah,
Mm-hmm.
I mean, with like all of the Refinitiv data, then I'll be also like starting to seriously build some Python-based dashboards where I can kind of like retrieve the data with relative ease. And of course, there's always like Excel, and I think the Anaconda has now putting out like a Python in Excel like add-on, which is still in like the beta phase, so it's like still experimental. But I think like in near future, we can actually like use Python in Excel, and I think that's probably like the best way to combine like
Mm. Yeah. Keep me
two
posted.
things,
I'm also interested in this. Yeah.
two things that's like are like useful, like you combine like a quant with like a common like financial like employee. But yeah, I mean it's like next week is gonna be relatively light, so I'm gonna spend some more time on like the tech labs.
Mm-hmm.
Yeah, but I think that's probably it. Beside
Okay.
that, they're just like just waiting for more data. Inflation is not that important. I mean, goods inflation is like, I mean, evidence because like we have like,
And we'll have services PMI.
right. Yeah, I mean, that's probably like can tell us like more about like the services side of things. But obviously, like, US is not a manufacturer manufacturing driven economy. So I think from like next week we'll have like some more hints from the services side, which
Yep.
I mean, if that's slowing, then it's really slowing. So
Yep. Okay. Fantastic. Nice we
and
made it through without Mo today.
and I mean, if there's
Yeah.
anything happening during the weekend,
Oh yeah.
I will be probably like fading whatever spike that there will be like in either gold or oil,
Mm-hmm.
because like yeah, like if we're talking about like paper tigers, then Iran is like certainly one. So I'm not gonna like it's gonna be just like a show of force, but like it's not gonna mean anything. So whatever that
Right.
makes oil or gold spike during the weekend, I'm gonna fade that. So we'll see.
Perfect. Yeah.
All right.
Okay. Let's just wrap it up over here, and yeah, hopefully we got some good stuff next week.
Yeah.
Cool. All right. Yeah. Take care.
Yeah. Bye bye.
Bye.